Okay, hello ladies and gentlemen. Today we are going to talk about analysis framework and execution. We're going to do a quick top down. This is for my students that are trying to learn how to study price. The best thing to do is to record your sessions, to go back and look at live markets of what you were anticipating and how you reacted in the market. Well, I'm going to give you the framework now and the analysis here starting on the daily time frame. Okay, so first thing we have is we have trapped order flow in a premium of the daily time frame. What does that mean? So from this low to this high, we're above 50%, right? We have a bearish order block right here. These two up candles created the bearish order block. We've hit that area. And since we've hit that area, as you can see, price has now been failing to trade higher. So we have seen that price has also traded down into the consequent encroachment or the midpoint level of the fair value gap, thus making it trapped order flow at a premium. So if I had to pick a side, I'm favoring shorts because the order flow is bearish. What does that mean? The order flow is bearish. Well, we're coming from start of the year already being here. We have swing point high, swing point low. What do? They further run this low, and now we have a swing high down to a swing low. When you're predicting daily bias, it's very simple when you just understand the dealing range. The dealing range is the price range between the swing low and the swing high. After each consecutive low is ran, you'll see a new dealing range created. So here I am showing you each dealing range, right? And then they ran that low, they ran above this high and created this dealing range. So as you can see, it's not very difficult to see this. It's just a matter of, do you understand it? Swing high, 3-candle pattern. This candle in the middle trades higher than the candle to the left and to the right. That's a swing high. This candle down here trades lower than the candle to the left and to the right. That's a swing low. Okay, so now when price pulls up and fails to get into a premium, and you see it shorts in this range, guess what? This becomes an accumulation, right? When price trades lower below this low, right, and then we see an immediate change in state of delivery, this becomes an accumulation, a manipulation, and now a distribution to the upside. Okay, so I've basically shown you why the order flow is in fact bearish up to the point where it ran these lows. Now we did see a break of structure here on the daily, but from this high all the way now down to this low on the weekly time frame, let's take a look at it for a second here. You can see on the weekly, we are actually trading at the midpoint of the weekly range. So the reason why I'm taking the time to explain all this to you is so you understand that dealing ranges are really important on the macro levels. You need to understand why is EU even consolidating or midpoint. The equilibrium tends to be where consolidation is formed at. And you can, as you can see, if this week fails to trade above last week's high, we have a swing high, which therefore means interbank order flow would be continuation bearish, and we'd be targeting this low for the long term. So with all that said, let's go back to the daily and take a look at what's going on here. We've hit the order block. We can take that off the chart now. And now we have a bearish order block here, and now we're looking at a bullish order block failed to run highs, right? Therefore, we're continuing to seek lower prices. So for the framework for today, we would have been looking at price running back into equilibrium. Why? Because we're at a discount of the range. So we're trading discount to premium in this consolidation. Okay, so here we are on the 4-hour time frame. And as you can see, we have our daily VISI here in premium level that we've already traded into, right? This is the consequent encroachment. We have a high, we have a low, a lower high, and today it makes a lower low, right? So it's a lower low to this high to low, but ultimately we know we're consolidating in a premium. So where would price realistically want to retrace to? as you can see, there's an eyeball here. There's a fair value gap, and there's a order block here with the fair value gap. So when you have order block with fair value gap, it creates high probability. And what I like to do is I like to refine those levels on the 1 hour time frame. Okay, so I'm gonna go ahead and put this level here. Okay, and then I'm gonna go to the 1 hour and show you. As you can see on the 1 hour, there's an order block here, and there's still a fair value gap. Yes, there's a wick here, but it's still nonetheless a fair value gap. Price is fractal. It doesn't have to be pretty. It can be traded into more than once. So now that you understand our targets, when we go to the intraday time frame now, we'll be able to show you how to study price action. Okay, so let's get right into it. With all that said, let's get some things on the chart. The first thing that we want to get on the chart is the true day range. What is true day range? Midnight to 12 p.m. There's your true day range. Okay, the next thing we want to do is go ahead and put that 4 hour fair value gap, which we find on the 1 hour. And this is our daily target. Okay, so we understand that. Next we want to do is put our Asia session there. We have our buy stops, our sell stops. This acts as an accumulation period to set up for London. So what is the first thing that happens in London? You see a run on the high, right? Buy stops, right? This acts as a stop hunt. You see a run below midnight price here, a pullback, which is OTE from this high to this lower high, and price now looks to seek sell side delivery. Okay, so let's go ahead and put some markings in and we'll walk through it. So here we have the London session. Now what's great about the London session here is that it actually runs the highs and the lows, and then you start to see the displacement back to the high upside, and you reach full target for the day. So from this low to this high, we effectively reach our daily target. The problem is I wanted to see a run into the daily fair value gap. So in the analysis, as from your study journal, the best thing for you to do is to look at the narrative that was in play here. You had Asia accumulate, you had a false move to the upside, a stop run. These last two up candles create the bearish order block. As you can see, once price breaks below this low and creates a swing low, we get OTE at the order block. Price continues to trade lower, right? We're not going to point out every single ray because the narrative is clearly in a sell model to this point. Once they get below this low, as you can see, they will accumulate in this fair value gap. They will manipulate and or stop run, create an order block, and displace the upside. Accumulation, manipulation, distribution to the upside. What are they looking for? They're looking to take out these buy stops. So what happens? They start to get sloppy here, right around the half hour point of the London Open here. But they pull back, they hit the fair value gap. This is also what, a breaker block right here. These last two up candles that run the stops, breaker block, and they displace above it. The moment that they get above these highs, I don't anticipate them to come back up here in London. At this point, we have a run into our daily objective. Okay, run into our daily objective. And now we're looking for what? Lower prices. We break the structure here. We pull back OTE, order block with fair value gap. Where is the narrative currently reaching for? Sell side liquidity. And seen as this is the end of London here, all of this is happening during London lunch. Now here's where I come in as a New York trader, and this is what I want everybody to study. This is the most important thing to master New York session. Here's New York session. What do you see here in New York session? You see the start of it immediately run sell stops. This ends up being our accumulation phase. Then, not only does it run sell stops, it takes another attempt. I love when price not only runs a low once, but it runs a low twice. Why? It creates a high resistance liquidity run. What do I mean by that? There's two types of W patterns. There's the one that does this, that makes a higher low. And then we get a retest to continue, right? And then there's the second W pattern that makes a lower low and then continues. This is the one I prefer because this low here already has ran a low above it. Then we run it again, we displace above that high, this creates the breaker, and then we get a retest. So that is what's happening here. We see a low ran here, And then we continue to run a low again here. Therefore, the displacement ends up being extremely fast. We see speed. We like to see speed in the market. When we see speed in the market, they're objectively trying to get to the buy or sell stops. And as you can see, we get a pullback into what? A fair value gap. Let's see if we can put the fair value gap on the chart. And here it is, lending close. Boom, fair value gap, displaced, run the buy stops, and there's the target. So take a look at this chart. When you look at this chart, there's only 4 things I want you to focus on. Number 1, the buy stops. Look at all the buy stops. You have your Asian buy stops, your London buy stops, and then your New York, which targets all the buy stops, right? Then the second thing I want you to look at is look at the arrays. Look at the arrays. When New York runs sell side, where does it run into? It runs into our daily fair value gap. That's what this area is. It runs right into our daily fair value gap. Okay, where is it reaching for? The 1 hour SIBI daily target. So we know what our arrays are. The next thing we're going to look at is the time of day. New York session, price is in a discount. Okay, and we're reaching for higher prices. So in your study journal, I want you to mark your charts like this. Should you have your charts marked like this on a live trading platform? No, you don't need that. This is for study. This is to go back and look and say, hey, I understand that these moves are happening at the same time every single day. And no matter what, there's nothing that's going to stop it. It's going to happen every day, no matter what. All you need to do is study time, price, liquidity, the arrays above and below, and have an understanding of the IPTA true range. There's no real intense markings on here, fam. If you really think about it, I literally just put the buy stops, showed you the stop points and where the order blocks are created, and we ran into a daily level, and we pulled back up into the refined 4-hour level on the 1 hour. And it all happened really fast in New York. This is why I trade New York, because New York gives me everything I need. All right, fam, I hope you found value in this video. Don't forget to like, comment, subscribe, check the link tree, okay? We're offering a ton of different services now. If you find value in this video, please don't forget to like, comment, and subscribe. I look forward to seeing you in the private Telegram and Discord groups. And to reach out for me, you can always email me at devotedpips@gmail.com or reach out on Telegram. Till next time, I'll see you later. Let's go.